I love this Bain report on private equity because it told us that there was $180 billion of private equity deals last year, which was the largest increase since 2007.
That's right, 152 deals. That is up from 94 the previous year, and that's the biggest since, as you said, the financial crisis, 2007. And these are a very specific type of deals. These are public to private deals. So these are publicly traded companies. The private equity firms go in, they take private. Presumably, if they're doing their jobs, they fix them and they sell them for more money down the line. And what's interesting about public to privates, obviously, is that there is a very clear valuation for them. And so they're seeing some value, or they at least were seeing some value in 2017, which is interesting given how much valuations have run up. And that's one of the constant refrains we hear is we want to buy more, but prices are pretty high.
Well, what about those valuations? Because you look at that chart, it can tell you one of two things. Either there's a lot more opportunity out there that we hadn't realized was there, or money is burning a hole in people's pocket.
Yeah.
Well, that is a really, really important point. $1.7 trillion in so-called dry powder. That's a staggering amount. That's more than there was in 2007. And so people do worry about some overpaying happening here. It's interesting. We'll get a lot more context this week. This is the big week for private equity over in Berlin, because who doesn't want to go to Berlin in late February every year? This is the Super Return Conference. So we've got some colleagues over there, Melissa Middleman, Sarah Syed, who'll be reporting in for us from there. So we'll hear what the big deal makers are feeling.
So I question, what is their return, their expected return on these deals versus something like they saw in 2007?
Well, what they hope for is, a couple times what they put in, 2-3 times. That's what people pay private equity for. But what you've seen, the other measure, as you know, for private equity is an IRR, an internal rate of return, in which they want, 15 to 20%. Are they really going to get that? That is really what remains to be seen, given all the volatility in the markets. What they're hoping for, candidly, is a little bit of a downturn here to drive prices down. And so what they're hoping, what the private equity guys are hoping for is, got all this money, maybe the economy goes a leg down, prices go down a little bit, they swoop in with some of that money and then sell it 5-7 years later.
Yeah, although that Bain report suggests they're now all waiting. So we're moving in anyway.
They are getting in there for sure.